What if the silver drop you're seeing right now isn't the start of a full-blown crash, but the final shakeout before one of the most aggressive rebounds we've seen in years? What if the fear spreading across the market is exactly what big money was waiting for? Because right now, silver is sitting at a critical level, and the next move could define the rest of this year. If you hold silver, trade silver, or even think about getting into it, you need to understand what's really happening behind the scenes. Before we break this down, make sure you hit that like button and subscribe to Silver Shockwave. It takes just a second, but it helps this channel reach more serious investors who want real insight, not mainstream noise. And if you're already part of this community, welcome back. You know we don't chase headlines here, we read between them, so let's talk about what's happening. Silver recently pulled back hard. After building strong momentum and attracting attention from both retail traders and institutional players, the metal suddenly lost steam. Prices dropped, social media turned bearish, and once again the word crash started trending. We've seen this pattern before. The question is this time different? First, let's zoom out. Silver is not just another commodity. It sits at the intersection of monetary metal and industrial necessity. On one side, it behaves like gold during uncertainty. On the other side, it's heavily used in electronics, solar panels, electric vehicles, and high-tech manufacturing. That dual role makes silver extremely sensitive to both economic fear and economic growth. Now, here's where it gets interesting. While short-term price action looks weak, the structural picture tells a different story. Physical demand hasn't disappeared. In fact, in several regions, coin and bar demand remains elevated compared to historical averages. Industrial demand projections for green energy infrastructure are still strong. Solar installations continue expanding, and silver remains a key component in photovoltaic cells. That demand doesn't vanish just because the chart looks ugly for a few weeks. So why did the price drop? There are a few major factors. 1, the US dollar strengthened temporarily. 2, bond yields pushed higher, creating pressure on non-yielding assets like precious metals. And 3, leveraged traders who entered late in the rally got squeezed out when volatility spiked. When you combine those three, you get sharp corrections, not necessarily long-term trend reversals. This is where psychology comes into play. Retail traders tend to buy when things look strong and panic when things pull back. Institutional money often does the opposite. They wait for fear, they wait for liquidity, they wait for forced sellers, and corrections provide exactly that. Think about past silver cycles. In previous bull phases, silver rarely moved in a straight line. It surged, corrected deeply, scared everyone out, and then exploded higher. That volatility is part of its DNA. Silver is known for violent upside moves, but people forget it's also known for aggressive shakeouts before those moves happen. Another key factor to consider is positioning. When sentiment becomes overly bullish, markets become fragile. Too many long positions mean there's little fuel left to push higher. A correction resets that structure. It clears out weak hands, it reduces leverage, it rebuilds the base for a more sustainable move. In many cases, the strongest rallies come after the market looks the weakest. Let's also talk about macro conditions. Global debt levels are not shrinking. Inflation pressures may cool temporarily, but structural inflation drivers remain: supply chain reshoring, energy transition costs, and geopolitical tensions. Central banks are walking a tightrope. If growth slows too much, rate cuts come back into the conversation. And historically, when monetary policy shifts from tightening to easing, precious metals respond quickly. Now imagine this scenario. The market starts pricing in rate cuts. The dollar weakens. Yields stabilize or fall. At the same time, industrial demand remains steady. That combination can act like gasoline on silver's chart. Suddenly, what looked like a breakdown turns into a bear trap. But we also have to address the other side. Could silver crash further? Yes, it's possible. If the dollar continues to strengthen aggressively and liquidity tightens sharply, silver could test lower support zones. Markets don't move based on what we want. They move based on capital flows. That's why risk management matters. The difference between a crash and a correction often comes down to context. A crash usually follows structural economic damage and collapsing demand. A correction happens inside a broader trend. Right now, we don't see evidence of collapsing industrial demand. We see volatility and repositioning. Another layer here is the futures market. Large players operate through leveraged contracts. When volatility spikes, margin calls force liquidations. That selling pressure can push price down quickly, even if physical fundamentals haven't changed. It's mechanical, and once that forced selling ends, price can snap back just as fast. Let's not ignore the geopolitical backdrop either. Ongoing tensions across multiple regions create uncertainty in energy markets and trade routes. Silver, like gold, often benefits from instability. It may not react instantly, but sustained uncertainty tends to support precious metals over time. Here's something else most people overlook. Silver supply growth has not dramatically expanded. mining output increases take years of investment and development. You can't just flip a switch and flood the market with new supply. At the same time, industrial usage continues rising in emerging technologies. That long-term imbalance doesn't disappear overnight. So where does that leave us today? At a decision point. The chart is sitting near a zone that historically has acted as strong support. If buyers step in and momentum builds, this pullback could be remembered as the launchpad for the next leg higher. If that support fails decisively, then we reassess and look at the next demand area below. For traders, this is about confirmation. Watch volume. Watch how price behaves around support. Strong rebounds often begin with sharp reversals and heavy buying interest. Weak markets grind lower with low energy. The character of the move tells you more than the headline. For long-term holders, the bigger question is thesis. Has the macro thesis changed? Has industrial demand collapsed? Has monetary risk disappeared? If the answer is no, then volatility becomes noise inside a larger narrative. This is why at Silver Shockwave, we focus on structure, not emotion. Emotional reactions create bad decisions. Structure creates clarity, and right now, structure suggests we are closer to a pivotal rebound zone than the beginning of a total collapse. Picture this. Fear spreads, social media turns bearish, weak hands exit, and then suddenly silver reclaims a key level. Shorts get trapped. Momentum algorithms flip. FOMO returns. That's how explosive moves begin, quietly and then all at once. On the flip side, if support breaks with strong conviction and macro conditions worsen sharply, we adapt. The market is always right in the short term. Flexibility wins. The important thing is not predicting with certainty, but preparing for scenarios. A disciplined investor asks, what will I do if price rebounds? What will I do if it drops further? Having a plan removes panic. We also have to remember that silver historically lags before leading. In previous cycles, it spent weeks looking weak before outperforming both gold and broader commodities. When momentum finally shifts, it tends to move fast, sometimes faster than most expect. Right now, volatility is high, opinions are divided, and uncertainty is thick. That environment often precedes major moves. Calm markets rarely create opportunity. Tension does. If you've been waiting on the sidelines, this is the type of moment professionals study closely. Not because it feels comfortable, but because inflection points never do. So is a crash coming or a massive rebound? The honest answer is this. The market is setting up for a decisive move. The ingredients for a rebound are building, but confirmation is key. The next few sessions could tell us a lot about intent. As we wrap up, I want to hear from you. Do you think silver is headed for deeper lows, or do you believe this is the reset before a powerful breakout? Drop your view in the comments. Your perspective matters, and these discussions help everyone think sharper. If you found value in this breakdown, share this video with someone who follows the markets but might be missing the bigger picture. And make sure you pre-subscribe to Silver Shockwave so you don't miss the next update. In volatile times like these, staying informed isn't optional, it's essential. Silver doesn't move quietly forever. When it decides, it moves hard. The only question now is which direction comes first. Stay alert, stay disciplined, and I'll see you in the next one.